helping you to weather good and bad economies without putting retirement on hold. This is the Tumolo Financial Podcast with Ken and Nick Tumolo. Ken and his son Nick know that creating a comprehensive financial plan can align your hard-earned life savings with your retirement goals. Consider them your retirement architects. Now, the Tumolo Financial Podcast with Ken and Nick Tumolo.
There's a financial hot take circulating over the SpaceX IPO. Critics are claiming retail investors are going to end up holding the bag. But where's that argument coming from? And is there any truth to it? Let's break it down. Why critics think retail investors could get burned. The valuation was massive. A lot of us know when SpaceX first came out onto the market, it was huge. Everyone was talking about it. They're saying it was going to start at $135 a share. A lot of us that wanted to buy it, we noticed it started around $155 if we were trying to buy it. And that's to the public. Thing is if you think about when we talk valuation, it actually equals about $1.77 trillion. It's big. And the last big stock that I could think about that was tied to Elon Musk, who's tied to SpaceX, and everyone knows that, it was Tesla. And it had its ups and downs in the beginning too. And the thing is, a lot of people over the years have become believers in Elon Musk. So, some of what fuels this hype around this SpaceX IPO was Elon Musk alone, and then space exploration. You would think back in the 60s, space exploration was huge. It's huge again. Everyone thinks it's going to be something big. It's going to be something new. Also tied into SpaceX, by the way, is their Starlink product, which has done excellent out there. So people are looking at that and the whole AI thing. So, and a lot of media coverage. So what that all equaled was a lot of people worried they're going to miss out on SpaceX. So when it came out, and it came out at $155 a share, those shares were driven up by demand because everyone wanted to buy it. Big thing that I will tell people, a lot of times when a stock comes out and it's a big name like that, it's tied to a bunch of things, the stock usually travels upwards, at least for a few days or a few months. And then a lot of times it pulls back a bit. And some of the reasons why is there's certain pieces of restricted stock that can be sold off in the future, and it adds more shares to the public. So the whole supply demand thing changes as it goes. So that's why critics think retail investors could get burned. So now why the holding the bag argument may be too simplistic. In our opinion, SpaceX just isn't a meme stock. And what I mean by a meme stock is just a small stock that everyone starts buying into because, and a lot of those meme stocks might only have one piece to it, and they're a small company and they're driven up. But SpaceX is huge. SpaceX has actually been around for a while, but it was in the private sector, and people are holding shares in it as private stock. So they have built up. Plus they have Elon Musk. But many disastrous market stories involve companies with weak businesses. That's not the case here. SpaceX has become one of the most important private technology companies in the world. It is a real business with real revenue and real market leadership. Big thing I'm going to add is time horizon matters. Think about it. If you bought Tesla when it first came out, it wasn't worth that much. And over time, as the company grew, it became worth more and more and more to you. There's a lot of them out there. Even the Google IPO, back when that came out, no one thought that was going to be anything great, and it ended up being great. So I always say time horizon with a lot of these IPOs. If they're big, strong companies, you have to give them the time. So think about it, 5, 10, 20 years from now, if you're still holding SpaceX, what is it going to be worth? So what nobody is talking about, not every investor buying SpaceX actually chose to do so. Okay. And you might be like, what do you mean by that? One of the big things that's going to happen, SpaceX will eventually end up in mutual funds that are in your 401k. It'll end up into ETFs. No one thought that Tesla would end up inside the S&P 500, and it did. So these stocks have a way, the strong stocks have a way of making them into these indexes. And then in theory, what you're doing is you're saving for retirement, you're holding some of these things. Sometimes those funds hold a little bit too much of the aggressive stuff, and you might be taking more risk than you think you're taking. But that's why you come to someone like us. We take a look at your picture. What are you holding? Should you change your allocation a bit? But the big thing is for those of us that want to hold SpaceX, but we're too afraid to buy SpaceX because it might be too volatile, we actually might be holding some. And it might be in our indexes one day. And the thing is, and I should say 401k that it'll be in, but the thing is, when it's buried in the 401k, it's actually buried with multiple stocks, so you don't get the full feel of the volatility of it. And that's what retirement planning is about anyways. You don't want to take the big hits. So in close, the SpaceX IPO remains one of the biggest financial stories of the year. But it's no longer just a stock market story. It's becoming a retirement investor story. Portfolio holdings can change without investors making any trades themselves. So you may already own a piece of the company and not even realize it. Whether you're considering SpaceX or another investment, or you just want to take a closer look at your savings to get a better idea of what you own and what your risk levels are, we can help. Reach out to us by clicking below or going to our website, tfcheckup.com.
Investment advice offered through Tumolo Wealth Management, an SEC-registered investment advisor. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here.